Good evening, guys. Today is October 12th or 13th, Friday the 13th. And I hope you guys are doing well. Markets are closed. It's about 3:30 here Pacific time. Markets were mixed today. The Nasdaq took a little bit of a beating, as you can see from this chart. On the daily chart, Nasdaq was down about 166 points, about 1.25%, 1.23%. Still within the channel for most parts. So the question is whether it'll bounce off of the channel or it'll break down the channel and touch it again. We had visible resistance here at the 13,677 mark because it was a double top, actually multiple tops. So you would expected this, but it's still within the channel. I'm not expecting the markets to do dramatically higher, nor am I expecting it to go dramatically lower. You should probably stay within this range is my expectation. But this is going to be a long haul, at least until the end of the year. So that was the Nasdaq index. The S&P 500 also went down about 0.5%, 21 points. Nothing much here also to be able to necessarily be worried about. Not a good sign if you are long on this market, but I've not been long since the first week of August for long, extremely long positions. So it's just chopping and churning right now. I'm not expecting any good trend coming out of this, given that most of the macroeconomic indicators are mixed, and also the consumer expectation in terms of just the amount of work that is being done by the consumer to take the economy higher is coming to a end point, I think, more than anything else. Inflation still remains a little bit stubborn, so people are getting a little bit worried. On the daily chart in the Dow Jones actually went up about 0.1%, 40 points, still within the channel, still within the range, so nothing dramatic. One of the stocks that didn't come up on the radar, but somebody asked me to analyze for them and see where this ends up is Cloudflare. NET is the name of the company, or NET is the ticker symbol. We start from the very top. Let's start with the financials first, and we go from an annual perspective, and then we go through a five-step process. So if you look at the company Cloudflare and their revenue growth from an annualized perspective, they've gone from roughly about $85 million in 2016 and now gone up nearly 12 times to about almost $1 billion in revenue last year, 2022, and they're on about a $1 billion trailing 12 months revenue run rate. So have grown from 60%, slowing down growth and then picking up again. So they've been in the 45 to 55, 60% range for quite a bit of time, which is good. They're not slowing down, and the TAM is huge. And the second part of it is they've slowed down a little bit on the annualized basis from 52% down to 48%. But their important part is they're still not making money. They're still the pre-tax income. They don't have income yet. They're still losing a lot of money. They're losing about $242 million last year. On a quarterly basis, though, their losses are reducing. This was a little bit of an exception, $100 million in Q2. But otherwise, you can see that they've gone from 50 million down to about 30 million. So, maybe if I'm doing a little bit more of a detailed analysis on the company, I want to find out why is it that it did $100 million in negative when it was in the 30, 40 range for the last couple of quarters. So this is not a great sign overall. In fact, the interesting part is the gross profit has been roughly in the 70, 80% range. But this one has increased dramatically. So this might be a one-time thing. Even if you look at it here, operating income hasn't dramatically increased, but this is nearly triple, nearly three times. So there's something going on here that I probably want to look at a little bit more. Not for this for right now, at least. From a balance sheet perspective, about $2.5 billion in assets, 2.6 billion on a quarterly basis, and about $1 billion in debt. So that's a little bit high in debt for a software company. Still not bad. I've got to figure out why is it that that they seem to have so much debt. That's another thing to figure out. Total shares, common shares outstanding seems okay. Price to earnings, they don't have earnings. So price to sales, 18 for a company growing at 40% to 50% year on year is very high. So this is ridiculously high. 18 times price to sales is very, very high. Margins are good. Gross margins are 75%. Net margin went from the 13% range negative to 30%. So this is pretty high. That's probably one of the reasons why it's been chopping and churning. So let's look at the stock. The company went public in the 2019 timeframe, roughly at about the $18, $19 mark, if you will, and then did a huge run up all the way up to $218 in the November 21 timeframe. So this was the peak of the COVID bubble. And then since then has been on a complete slide. So this is stage 1, stage 2, stage 3, and then stage 4 decline. And then since then, it's actually been very, very range bound. That's what I'm seeing overall on this stock. Look at this. This is essentially a range bound stock. Building a base, there are two ways it could go. It could either go lower from this base, or more likely it's forming a stage 1, grow from this and go higher. So on a high level monthly perspective, this stock is in a stage 1 or a stage 4. Either having declined, it's now building a new base, or stage 1 or stage 3, I'm sorry, building a new base to go up, or building a constant base, it might head down. So that's one of the things to watch out for. Let's go on a weekly basis, see what we find. That's where the range bound comes into clarity a little bit more. It's been range bound, long range, big range, from the 40, 38, 40 range all the way up to the 70 range. So that's a pretty large range for it to be bound in. You look at the 75 range, so 35 to 75. I'd say a $40 range, it's where it's been for the last, close from May of 22 to September 23. So a year and a half, it's been very much in this range bound nature. What would expect, how you should play this is, yes, you could definitely play it in a way that you buy it closer to the $40 range and sell it closer to the $70 range, or you just wait. It's coiling up very, very well. So that's a good sign. Whenever this happens, there's a very tight range bound nature of this. It usually breaks to the upside or the downside. So you've got to watch for that. So this is a good sign. The fact that it's very range bound, of course, it's not good if you bought it in the obviously 200 range or the 100 range or even the 70 range. But if you bought it in the 40 range, then this is a good sign. This is just calling up even further to wait for it. So how I would play it, so I see still range bound nature in the weekly chart. And on the daily chart, let's also look at the moving averages, see where they are, and also see where the rest of the stock seems to be doing. So on the daily chart, moving averages are mostly flat, so I'm not expecting anything great from this. The RSI is pointing downward. That's also not a good sign overall. Do I see any patterns? So you see a multiple top, so that would be a logical point to put. It seems to have a big amount of resistance in the 67, 65, 67 range. So this is a big resistance point. It's bounced a bunch of different times in the 55 range. So 55 to 67 is actually the range it is going to be bound in for a little bit of time until it breaks out. So this actually is a couple top, 1 top, 2 top, 3 top. So it's probably going to go back and test 55 is my suspicion, or even somewhere before that, and then try to make a swing again. So if it crosses 67, I'd definitely be interested all the way to 76, and it's got to cross 76 as well. This is another point of resistance, I would say. Let's draw that other point of resistance, which is in this range, 72 range. So first off, you got to find out where it actually, follow the stock for a little bit. Where is it going to bounce again? So it might head up a little bit lower. 55 range might be a good point to buy it. Obviously, it's not going to get down to 40 all the way, it seems, unless something dramatic happens in the market, or with the stock in the earnings. They're expecting next earnings in probably, November 2nd, so about 4 weeks away, or a few weeks away, not 4 weeks away. Last earnings, it had good earnings last time around. What did it do after earnings? Actually, it closed up a little bit higher, but not a great start, not a great looking candle. It tried to go much, much higher and then broke down, landed up at the end at 69, and then since then has been moving down. So this is a double top. It's definitely going to move downward. The question is, how much more down does it move? Do it bounce off of 55? Does it might go a little bit lower? Watch for it. There are a bunch of resistances as well that could be short-term resistances, somewhere in the 59 range, somewhere in the 57 range. So 59 to 57, this looks like a long range. So if you go to longer time frame chart, you'll find that there's a bunch of stuff over here that might happen, 50 to 55 zone that you might want to buy it, and then hope for it to go to 70, 67, which needs to cross, and then sell it and move forward. That's my analysis on NET. Hope you guys liked it. Thank you very much for following. Please like, subscribe,